This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asian stocks set for a positive start to the week, with the S&P 500 closing Friday at a record high. Investors are awaiting fresh data from across Asia for signs of economic resilience. Trade in focus, with President Trump saying he won't need to extend the July 9th deadline to secure deals. And investors are awaiting China's June PMIs out in a few hours' time for signs of a pickup in activity amid the trade truce with Washington.
And we could see a little bit of a pickup in Chinese stocks, given that we are expecting the official manufacturing PMI for the month of June to actually turn into positive territory above that 50 threshold. Take a look at the Japanese yen right now, strengthening against the U.S. dollar. We have seen the Nikkei, of course, gain for 4 consecutive sessions already. We're seeing futures pointing to more gains in today's session. We could see a little bit of more risk-on sentiment. Of course, we have more optimism over potential trade deals with the United States. We are getting an alert also on the Bloomberg, though, seeing the May industrial output has risen only 0.2% year-on-year. The estimate was for gains of more than 3%. And on the month-on-month basis, we're talking about a contraction of 2.9%. Of course, we had seen some gains when it comes to chip manufacturing, but we continue to see that pressure on overall exports, with car manufacturing falling. We're talking, of course, about that 25% U.S. tariffs on the auto sector that continues to ripple through across Asian economies. Sydney futures right now not doing much, but this, of course, as we're coming from record highs on Wall Street. Take a look at how U.S. futures are also setting up, because we saw treasuries kind of stalling, but of course we'll have to watch different data points in the U.S. as well. We had actually consumer sentiment, consumer spending actually picking up in the past few months. You can see U.S. futures at the moment gaining 0.3%. We had already seen a fall for the week when it comes to oil prices because of those tensions in the Middle East easing a little bit, and you can see Brent crude at around $67 a barrel right now, Heidi.
Shery, on the topic of trade, President Trump says he doesn't think he'll need to extend that July 9th deadline for trading partners to secure deals with the U.S. to avoid higher tariffs. But those deals appear poised to fall short of delivering the sweeping global trade reforms Trump promised. Our Bloomberg editor Tony Trusco joins us now for more. And Tony, we've seen indications of this before, right, with the UK and certainly with the, understanding about the deal around China as well, that there's sort of very scant details around these agreements.
Yes, there's been, there's often been maybe less to these deals than meets the eye, or they've been scaled back, if you like, in their ambition. If you think back about to, say, April 1st, or when Trump's policies first took shape, this the goal clearly seemed to be a very dramatic remaking of the global trading system, basically in America's favor, or so it was built. And now you're seeing that when you slog through these things, it's not that easy, and the deals that come out are also very broad brush, or perhaps partial. So you also have Europe. The EU is obviously has a huge trading relationship with the U.S. That's fraught in some ways, certainly for Trump. And we saw the French finance minister, I believe, who came out and said, well, I think we're going to hit that July 9th deadline, at least in the sense of avoiding the worst. And part of that deal possibly involves, buying more U.S. LNG. So it's going to be a very dramatic next 10 days, but the outcome, as you say, may be somewhat less, and there may also be sort of holdouts or holdovers that will take longer.
Because we're also getting conflicting messages from the White House, right? Secretary Besson talking about potentially leaving that 10% tariff in place instead of increasing them for some countries that are, quote, negotiating in good faith. Do we have any idea right now which countries might perhaps be getting closer to the finish line?
Yes, absolutely. And I mean, there's been talk for some time. I think we've heard this before, certainly about India being in a sort of a pole position or closer than others. There was an Indian trade delegation that was in the U.S. in Washington the last few days, and there was some optimistic readouts after that. Although, of course, the issues are very fundamental in some cases, including U.S. exports of GMO crops to India. So how to handle that? But yes, India has been talked about, Vietnam, I believe too, and Taiwan also was again in the news in the last few days as being a potential kind of a first tier, top tier candidate for a deal.
And it's really a tricky situation for all of these countries, right? Because there are so many different batches of tariffs at this point. The UK did manage to get, I suppose, a trade deal with the US, but they're still seeing those metals tariffs in place.
Yeah, and that's partially a fear also for countries or major countries like India, the so-called sectoral tariffs. How do you deal with that, and are they up for bargaining? I mean, the U.S. the threat of imposing them, whether that's actually up for negotiation, and it's been on a separate track. And the Trump administration has made it clear that they're keeping it on a separate track from these so-called reciprocal tariffs, which are really country-by-country tariffs. So you're kind of juggling various balls here, and all of these countries have to do that. Some more, some less, and that's Trump really hasn't showed his hand very much over the last, let's say, 48 hours, certainly over the weekend, where he just sort of said, well, I'd actually like to, call timeout right now if I could. And at the same time, if we need some more time, well, then that's okay too. So there's this usual sort of base level of uncertainty that's wafting over all of this.
Bloomberg editor Tony Shushka there. And for further insight into where trade negotiations stand, Bloomberg will be speaking to the U.S. Treasury Secretary Scott Bessent later today. You can watch that interview at the times that are on your screen. Let's take a look at what the meaningful implications are when it comes to the broader economy. Louise Loo joins us now, who's a lead economist at Oxford Economics. And Louise, I'm curious, at this sort of in-between stage when it comes to not knowing too much about how trade is going to play out for the rest of the year, how are you, I guess, baking tariffs into the economic outlook, not just for the US, but certainly the potential for implications around the world?
Well, so there are two channels by which we see this play out. One is through the very direct export channels, so how much trade gets shrunk back on, how much contraction we see in trade. To a large extent, that's actually been supported by a lot of front-loading activity. And I think this week, some of the trade data we would get, we are expecting that front-loading strength to still persist for a little bit. The second way by which we think the trade uncertainty would transmit to the rest of the economy is really true where we think private investments would be, where we think businesses would respond to some of these uncertainties that are looming in the very near term. Our expectations is that across Asia, we would see a bit of a dampener on private investments, which probably would set the conditions right for public investments, so for the government to really step in to do a bit of the heavy lifting at a time when the economy seems to be moving along quite tepidly.
It's one of the channels that we talk about is sort of the embedded nature of tariffs, right, and potentially how entrenched those expectations are. Is that a risk when it comes to confidence levels, investment from companies, but also from consumers and households too? Yeah,
absolutely. And I think there are two risks. One is that because of the volatility in trade negotiations, the uncertainty that we saw in the last 2 or 3 months, governments and maybe businesses now have the ability to, well, at least they have the inclination to look through short-term noise, to really think about what the ultimate level of tariffs might be. And I suspect that, that implies that any of the short-term news or volatility that we see coming up due in July 9th, that might actually have less of an impact than what we saw at the Liberation Day announcements. So that's one. Second is, I think also investments are going to be weighed down heavily, but also what's happening by some of the second order effects. So, if you have China slowing as a result of the trade war, as a result of the trade tensions with the U.S., then what's that gonna imply for the rest of Asia? So I think that the effects, the ripple-on effects on the rest of the economy seem to be twofold, and I think that we're perhaps right at the start of that playing out in the economic data.
And how fast is the transmission mechanism of that ripple effect that you talk about? Because already, given the temporary truce that we've seen between China and the U.S., we're supposed to expect June manufacturing PMI from China to turn positive?
No, well, our house view is that we don't think it would turn positive. We think that it would stay kind of in the 49 region. Obviously, it's been at a 49 area for a while now. We're talking about June PMIs for China here. So I think when you talk about the speed of transmission, we think that it will likely be quite immediate, as we've seen over the last 2 or 3 months. But going back up, so recovering from that's going to be quite sticky, because I think of the tremendous amount of uncertainty around that, the fact that some of these trade deals don't really seem to be the conventional trade deals that people understand them to be. So there is a little bit of a disappointment around the details of that. And I think that will weigh on sentiment for much longer.
The China PMIs are always a key focus. Actual manufacturing and business activity, right? Because we have seen, for example, South Korea's industrial production coming in contraction territory, and we were expecting actually a boost.
Exactly. So I think going forward, the risk is that data would surprise us to the downside rather than the upside. Just because I think the strength that we saw over the last few months could plausibly be temporary in nature, front-loading, rerouting trade. A lot of these, I suppose for a lot of the Asian exporters, including Korea, the resilience in tech exports is also one of the factors that we think will potentially normalize in the second half of this year. So a lot of the strength that we saw, a lot of the optimism, a lot of the upside surprises to data in the last 1 month or two has been kind of the temporary factors. So there is no reason to think that, we're not kind of on the way down from here on.
And is that the case when it comes to China as well? Does the sort of temporary truce add any upside potential for the PMIs, given that they're leading indicators anyway, and given there are structural issues that we know of with the Chinese economy, even without looking at the tariff situation?
Yeah, well, for China, I think the PMIs are notoriously noisy. So we don't really want to be too hung up on one data point. Having said that, the situation with China is a little bit different. I think for China, we are not really seeing substantial upside. But on the other hand, because of the truce, because of the fact that we think Beijing officials will continue to leverage on its critical minerals dominance, that would remove a tail risk scenario. So I think at this stage, if we talk about macro growth, any growth below 4.5% is probably quite impossible for China. So I think growth will probably be relatively stable and decent this year, but nowhere near spectacular, I think.
Louise Loo, always good to have you with us, lead economist at Oxford Economics. And coming up on the Asia trade, UBS joins us with their market outlook. Plus, we talked to Japan's biggest pharmaceuticals wholesaler, Medipal, about their business strategy. Much more ahead. This is Bloomberg. President Trump's signature tax and spending bill is facing opposition from some Republican senators as another deadline looms. Trump wants the legislation passed by July 4th, and party leaders need to find a way to appease most of around 8 senators who've expressed concerns. For more, let's bring in Bloomberg's Alicia Diaz. Alicia, so really a big chunk of the issue is to do with the state and local tax deductions, which were slashed during President Trump's first term, right? Tell us about why this is so important.
Correct. So a big holdup right now is they have reached this tentative deal with the state and local tax deductions that was reached on Friday. And they came to this agreement that they would increase the limit to $40,000 over 5 years. And this has been a big hangup. There's a couple of very strong-headed Republicans in the House who This is very important for their constituents, and they're trying to kind of find that negotiation process with the Senate. At the same time, there's a group of senators who are conflicted about the bill. Some say that it's too expensive and want to look for more spending cuts. Others say that the cuts that they're doing to Medicaid, to some of the federal government's run healthcare for the poor and the disabled, could hurt their home state significantly. And so, of course, we're reaching that July 4th deadline very soon. And so there's going to be a continuation of negotiations and trying to get some more Republicans on board over the next few days.
The president hasn't necessarily delved into the details of the deal, right? But might that be necessary in terms of amendments and the details that opponents are not happy with?
I think that will come to light over the next couple of days. The Senate is consistently revising their version of the bill to bring some of these other Republicans, some of the more moderates, some of the folks who are more concerned about the deficit impact on board. So as they reach these negotiations, we will kind of get that final baseline of what the bill really entails, and some more of the details will continue to come out through the next week.
Yeah, you can actually see live pictures of Capitol Hill with Senator Chuck Schumer on that screen talking about $4.45 trillion deficit explosion is what he's calling it. But tell us a little bit, Alicia, of how this is playing in with the broader American public, because, of course, you mentioned some of those tax cuts would come from spending cuts in other areas like Medicaid and things that are important for the more vulnerable parts of American society.
I think it remains to be seen how the bill is going to play with some of the Republican communities across the country. Early stages, it hasn't pulled entirely too well. Of course, Republicans are really relying on this bill. They have the so-called trifecta, the White House, the House of Representatives, and the Senate. So this is their chance to really get a big piece of legislation through the door. And it'll impact them through midterms and future election cycles if the public doesn't vote, too well with the results of this bill. So I'm sure we'll see more of how that sentiment plays out in coming months.
Bloomberg's Alicia Diaz there. Some of the other stories that we're following this hour, and Thai Prime Minister Panjamtan Shinawatра's approval rating has plunged to single digits. Thousands rallied in Bangkok on Saturday amid fallout over her leaked phone call with the former Cambodian leader Hun Sen, in which she seemed to criticize the Thai army. Now, Hun Sen himself, in a televised address on Friday, pressed for the Thai Premier's resignation over her handling of a border dispute between the two countries. President Trump says he's found a buyer for the U.S. operations of social media platform TikTok, but won't provide details for 2 weeks. Trump told Fox News that it was a group of very wealthy people, but the deal will need China's approval, and he expects President Xi Jinping to agree to it. Trump has said he will extend a deadline for ByteDance to sell its U.S. TikTok operations for a third time. Australian Foreign Minister Penny Wong will meet with her Quad counterparts during her visit to Washington this week. Wong will meet with US Secretary of State Marco Rubio, along with representatives from India and Japan. According to an emailed statement, this will be the second such meeting of foreign ministers from the four nations within 6 months. US Energy Secretary Chris Wright says the administration's goal is to secure a peace deal with Iran following the strikes on the country's nuclear sites. Speaking to Bloomberg, he added that Washington aims to promote commerce, not conflict, in the Middle East.
The sanctions are still in place. No change there. I think what President Trump was referring to there is, hey, if we make a large peace and sanctions come off, Iran can flourish.
Have you got a decent understanding, though, Mr. Secretary, of just how much Iranian crude is being consumed and imported already as things stand, despite the sanctions?
We do. So Iran produces about 3.5 million barrels a day, and they've been exporting about 1.5 million barrels of oil a day. And the maximum pressure campaign that President Trump did in his last term tamped that down to only 100 or 200,000 barrels a day. They cut off 90% of it. That was a possible strategy here as well, but hadn't been implemented yet. We tried to give negotiations a chance, see if we can do it without maximum pressure.
So is maximum pressure still on the table, or is the administration walking away from that?
Well, the goal right now, of course, is to get a peace deal, is to get peace into the Middle East and spread the focus on commerce, not conflict. So, no, it's not actively being discussed right now, but the situation is still dynamic there. We want to see peace, prosperity, and security as the future of the Middle East.
When it comes to what's going on in Iran as well, in terms of the IAEA, the foreign minister said yesterday that basically they have no plans to having the Director General, Rafael Grossi, in Iran. And it doesn't sound like they're willing to give the inspectors the space, time, and access they need to look at these nuclear facilities. What is the United States' response to that?
Yeah, look, this is early on. This is early on. Iran has just had most of its nuclear program entirely devastated by Israel and the United States. They're a little bit humbled. They're a little bit shell-shocked right now. So, yeah, I wouldn't put too much weight on those words, but a final peace deal certainly has to have confidence in a dismantlement of the Iranian nuclear program and that people can have security it won't be resurrected in the future.
You deal with a lot of nuclear at the Energy Department. Before the U.S. strikes, but after the Israeli strikes, Rafael Grossi told us that the IAEA cannot verify whether 400 kilograms of 60% enriched uranium in Isfahan was currently where it was. Was it still there? Did the Iranians take it out? Doesn't the IAEA need to go in and verify where this enriched uranium is?
I think that's quite likely part of a future negotiation or a future deal.
U.S. Energy Secretary Chris Wright speaking to Bloomberg's Jonathan Farrow and Anne-Marie Hordern. We have more ahead on the Asia trade. This is Bloomberg. This is the Asia trade. The latest from the corporate front. Ford CEO Jim Farley says the automaker had to idle its factories in the U.S. for the past 3 weeks due to a shortage of high-powered magnets. Farley says this shows the need for domestic supply chain as U.S.-China tensions restrict supply of rare earth elements. The magnets are critical to seats, windshield wipers, doors, and audio systems. Former Hong Kong Stock Exchange chief Charles Lee plans to list his new fund, MicroConnect, on the bourse this year. If successful, it would mark the city's first investment fund IPO in nearly 15 years. The fund aims to support small businesses across China, Southeast Asia, Latin America, and the U.S. Meanwhile, HKX seeing a wave of weekend IPO filings from biotech firms Bliss Bio and Hangzhou Daigens to hotel giant Jinjiang.
Take a look at how we're shaping up when it comes to US futures right now. We're seeing quite a bit of sort of muted optimism, if you will, about the 0.75 or about 0.4% higher when it comes to US futures at the moment, despite these concerns that the trade deals might fall short of expectations. Take a look at what we're watching when it comes to the commodities complex at the moment, and this as we continue to monitor sort of the muted developments in the Middle East, right? Winding back really that risk premium before now an OPEC Plus meeting is that next point of focus. We're seeing Brent really pulling back 0.8% softer there. We're also seeing some downside when it comes to havens like gold off by 0.2%. But when it comes to oil, we saw that biggest weekly loss in more than 2 years. Hedge funds, bearish bets following that fragile truce being struck between Iran and Israel. We're set to see OPEC Plus considering another 411,000 barrel a day increase for August. They meet on Sunday. That would be the fourth month of a bumper hike. So crude at the moment pretty close to where it started before the first attack by Israel on Iran on June 13th. So we're looking back to the fundamentals of supply and demand. We're also watching iron ore ahead of those China PMI gauges later today. Well, the trade war, all of this has had an impact when it comes to Australia's forecast for commodity export earnings as prices dip, demand softens amid rising trade tensions. Bloomberg's Paul Allen joins us now with more. The uncertainty when it comes to China's trade, China's domestic growth situation, how's it playing out when it comes to the outlook for the drivers of Australia's wealth, typically, stuff that we dig out of the ground.
Yeah, not terribly encouraging. The Department of Industry, Science and Resources puts out a quarterly report, the latest one, even more bleak than the one that preceded it. Total resource and energy export down 7% in the year to June. That's dollar terms about $18 billion, so that brings it down to an estimated $252 billion US. And then if you break it down by particular commodities, iron ore, which is Australia's largest export commodity, most of it goes to China, the biggest customer. Well, it was already suffering from weak demand due to China's property difficulties, and the tariff battle with the United States hasn't really helped either. The body of the report deals with that specifically, saying, look, businesses and consumers are just adopting a wait-and-see approach when it comes to not just iron ore, but a lot of other commodities as well. And the outlook's not great either. That's expected to keep going, that trend, over the next couple of years. Demand keeps slipping, although faster than in the previous report 3 months ago. LNG, Australia's second biggest export. There's new supply coming on from the US and Qatar, so that's going to see another $21 billion decline over the next 2 years.
A whole different picture when it comes to the price of gold that's been steadily rising, right? Is that going to soften the blow when it comes to Australia's commodities exports?
Yeah, to some degree, 3,200 an ounce. I mean, we're off record highs, but still not far from them. And if you put that into Aussie dollars, the gold price is still above 5,000 an ounce. So if these prices hold, gold is going to soon overtake metallurgical coal as Australia's third biggest export earner, and that's behind LNG and iron ore. Also offsetting the price of copper, lithium, which are holding up and have a fairly promising outlook due to the transition to new energy and the long-term demand around that as well. Australia is blessed to some degree in that, in terms of its resources and minerals base, it's pretty much got it all. It's got the rare earths, copper, iron ore, anything you can think of, including uranium as well. So it's diverse. The resource minister notes this as well and says Australia is going to remain competitive, but certainly from a government perspective, it's going to make budget time a bit more exciting.
Thanks, Paul Allen there. Take a look at watching when it comes to the start of trading this week, with markets coming online in about 25 minutes or so here in Australia, as well as watching Japanese stocks as well. We've already seen US futures kind of ticking along to the upside. We're seeing a little bit of muted upside for Aussie futures there, and Nikkei futures, us trading at 0.9%. US stocks on Friday rising to that fresh all-time high for the first time since about February. So there's quite a bit of conviction when it comes to the resilience of the US economy, despite these ongoing trade talks, which is a bit of a mix in sentiment given the concerns that it may sort of fall short of some of the details that markets might want. And institutional investors we've spoken to appear cautious about stocks in the second half, citing risks such as the tariff deadline, mixed earnings outlooks, US-China tensions. Let's get more from Garfield Reynolds, who leads our Markets Live Asia coverage. The reality is that there's plenty of uncertainties, right? Whether you're looking at sort of bread and butter fundamentals as we get back to earnings, the macroeconomic risk, trade, geopolitics, the markets seem to be kind of muddling along and quite happy to see the upside.
Yeah, well, there are certainly some corners of the market that are very much doing that, and I think you can't underestimate the impact that retail investors are still having. You also, I think when you were giving that rundown of risks and thinking, well, the market's kind of lived through the ultimate play out of risks when it comes to tariffs, with the reciprocal tariffs, April 2 Liberation Day, and all the shock that caused. And the stock market has more than come back from that particular decline that followed after that. So in that scenario, there's an unwillingness to bet against US equities, given that they have come roaring back time and time again. We had similar meltdowns back in early 2023 with the regional banking crisis. We had the concerns in late 2023 when the UK problems set off the bond markets. Then we've had other incidences that caused similar angst levels, and yet here we are again looking at equities at a record high. The biggest concern probably is that valuations are looking stretched. We're above 22 times forward earnings for the S&P 500. That's the sort of level only seen, well, in the last year or so, it's been seen on occasions. Before that, we got it in the post-pandemic boom when there was all the stimulus around, and back around 2000 when the dot-com bubble was, by that stage it burst, things were coming down. But that's the sort of levels that were achieved also in the run-up to it. So that's signalling good reason to be apprehensive that things could go pear-shaped from here. But at the same time, as I said, a lot of people have missed out if they didn't buy the dip. Buying the dip has proved to be such a good strategy that investors are unwilling to let it go.
Is that apprehension something that we're seeing in the bond markets as well? And what's the trajectory from here, given that, of course, we're still kind of uncertain what the Federal Reserve will do?
Yeah, well, I mean, the bond market is back in one of those scenarios it's been in a few times over the last couple of years where it's very strongly expecting the Fed will cut rates. Not in July. That seems unlikely unless we get a really shocking jobs report on July 3rd. But it does expect the Fed will move to cut in September and then at least once more this year. And that's going to be enough for the bond market to do well. And the bond market to some extent is also buoyed, I think, by it's actually had almost as good a first half as the stock market. For a while there it was doing better, and it's been much steadier. So it has in fact delivered exactly what you would want to see from the bond market, which was a nice gradual rise in returns, a haven from the volatility that was hitting the equity market ultimately, even though, of course, famously we had the slight moment of yippiness that President Trump reacted to in April. So the bond market is keeping its eyes very much on the prize of Fed rate cuts. And again, you're learning to live with, learning to look past concerns about things like what the Trump's tax and spending bill will bring as far as extra deficits, what sort of inflation might ultimately feed through from tariffs, what it might mean if the tensions between President Trump and Federal Reserve Chair Jay Powell break into the open. Those are the risk factors for treasuries there. But at the moment, investors are looking to the Fed and the strong expectation that the Fed will bite the bullet sooner rather than later and deliver rate cuts that will ease any difficulties that the bond market might otherwise have.
Much yippiness when you take a look at the longer end of JGBs?
There's definitely some yippiness there. Although, I mean, we'll see. It's been a bit of a whack-a-mole for the BOJ and for the Ministry of Finance. They managed to scrape through with the 20-year sale. Last week went off much more easily than the prior month's sale. So we'll see how the 10 and the 30-year go this week. There is a lot of concern. It probably helps the JGB outlook that for the moment the US Treasuries market looks like it's in a decent place. So if that continues to be the place, if we don't see any too much upward pressure coming across from the US market, then they might scrape through. But there'll be a fair bit of nerves for both of those auctions. That's tomorrow and then later on in the week.
Garfield Reynolds, always good to have you with us. He leads our Markets Live Asia coverage. And of course, a reminder that we have live coverage of the ECB forum in Portugal on Tuesday. We'll hear from key monetary policymakers, including Fed Chair Jay Powell and the Bank of Japan's Kazuo Ueda. It will be moderated by Bloomberg TV's Francine Lacroix at 9:30 p.m. Hong Kong time. And coming up next, we speak with Japan's largest pharmaceutical wholesaler, Medipal, about their business outlook as Tokyo's top trade negotiators continue high-stakes talks in Washington. This is Bloomberg. Take a look at how we're setting up for the Japanese market opens. We had seen 4 sessions of gains for the Nikkei. We're seeing some upside early in the session. And of course, we've been watching the Japanese yen as well because it's become weaker against the US dollar. We're seeing a little bit of more of that rebound, but we're still in the 144 level against the greenback. You can see the Singapore Nikkei futures pointing to the upside right now, 0.8%. But what we'll be watching is a JGB space because we do have a 10 and 30-year auction on tap. Of course, we have seen a lot of volatility in this space. We do also have, in a few minutes, Japan industrial production numbers, so do stay with us. But let's talk a little bit about one company, because Japan's biggest wholesaler of pharmaceuticals saying that it plans to evaluate cash deployment strategies to ensure better returns to shareholders. Medipal issued the rare statement last month saying it wants to increase return on equity to 9% by the 2027 fiscal year and improve its price-to-book value ratio. Let's get more on all of this with Toshihide Yoda, Senior Managing Director at Medipal. Toshihide, really good to have you here in the Tokyo studio. Before I get into the details of your financials, just tell us a little bit about your company, because you were 3 pharmaceutical wholesalers that merged back in 2000. So what do you specialize on? Because you're sort of a distributor for major companies within Japan.
Thank you for your question. We are, of course, a pharmaceutical wholesaler, but we are trading actually everything in Japan. However, the primary market, like hypertension drug, such a kind of drug will going to the generic. So maybe the Japanese market bipolarized to the generic and specialty pharma. We have to make a strategy for bipolarized, right?
So in your financials, your price-to-book ratio has been below that 1 time for the past 5 years or so. Your target right now is raising that. Do you have a time frame in mind?
Actually, we have the midterm plan year ending March 2027. And our target is by the end of the midterm plan, we are trying to reach to the PBR 1 times.
What prompted this sort of focus on your price-to-book ratio right now?
Firstly, we have to make a new business or profitable business. In addition to that, we have to reduce the net asset. We are selling investment shares. Historically, we have plenty of investment shares, and it's cross-holding. We are selling, and afterward, we make a share buyback and cancel our stock. So both sides, the increase the profit and reduce the asset, then we are trying to reach PBR 1 times.
How confident are you when it comes to the profit goals, or do you think there might be some flexibility in needing to revise those?
We think about at least the 1 times because historically pharmaceutical wholesaler and including maybe similar company, we are thinking about a P&L statement only one. But balance sheet is quite important, and because of both strategy, P&L statement and balance sheet control, we believe reach our target to the PBR 1 times.
What are the plans when it comes to the use of cash in hand right now?
Actually, as I said, use the cash to share buyback, and also the important thing is diversify the profit resources, which means maybe the MA strategy is quite important. Recently, we bought a food company at a kind of raw material of food. Such a kind of diversify of the business is quite important.
And those are the segments that you're still looking for more M&As?
Yes. Pharmaceutical wholesaling business, maybe margin will be squeezed in the future. Still, is squeezing right now.
Why?
Because of the everybody sell same thing, right? So user shift to the cheaper product, right? So margin will be shrinking. But now 3 companies dominate about Japanese pharmaceutical distribution business. So business exists, but margin has been squeezed. So we have to make a diversify. Of course, generic business is quite important. Also, specialty pharma business is quite important. And also the other business, like food business. Such a kind of, the product diversification is quite important to value up the company.
When it comes to food businesses, how exposed are you to geopolitical tensions? Of course, we talk about tariffs all the time. When it comes to pharmaceutical distribution, you are very much focused domestically. But if you are talking about raw materials and other things, does that expose you more to external vulnerabilities?
Actually, the still target is a domestic market. I said that raw material, our food is kind of gummy. Yeah. If you, when you eat something to sticky thing, everything have our product, right? Such a kind of raw material food, and it's quite a basic food, but a stable market.
Oh, I see.
Right.
You're also in cosmetics. You're also in animal health as well. Do you see other segments that could grow faster without the squeezing margin that you talk about in pharmaceuticals?
Right. Especially animal health, animal pharmaceutical drug is quite important because of the companion animal or the pet will be increased also in Japan, and also this kind of area has no cap by the public insurance. That is quite important. Pharmaceutical business is quite big, but Japan covered by all public insurance means price has been capped.
I mean, I know very well how much you can spend on your dog, on your pet. So thank you so much, Toshihide Yoda, Senior Managing Director of Medipal, talking to us through the pharmaceutical business, especially when it comes to pets as well here in Japan. We do have breaking news for you at the moment. Japan industrial production gaining 0.5% for the May preliminary numbers, which is a smaller gain than was expected. Still a rebound from the previous month when it actually contracted more than 1%. The year-on-year number still, though, a contraction of 1.8% and also a bigger contraction than what economists has estimated. Of course, we do have really a dynamic variables here in Japan, including the auto tariffs hitting auto manufacturing, not to mention, of course, the chip sector continuing to grow. So we're seeing now the industrial production numbers growing 0.5%. Catch Japan Ahead every Monday at 8:40 a.m. if you're watching in Tokyo. Subscribers can watch live on the terminal using the TV Go function. This is Bloomberg. Take a look at how we're setting up for the Japanese market opens. We had seen 4 sessions of gains for the Nikkei. We're seeing some upside early in the session. And of course, we'll be watching the Japanese yen as well because it's become weaker against the U.S. dollar. We're seeing a little bit of more of that rebound, but we're still in the 144 level against the greenback. You can see the Singapore Nikkei futures pointing to the upside right now of 0.8%. But what we'll be watching is a JGB space because we do have a 10 and 30-year auction on tap. Of course, we have seen a lot of volatility volatility in this space. We do also have, in a few minutes, Japan industrial production numbers, so do stay with us. But let's talk a little bit about one company, because Japan's biggest wholesaler of pharmaceuticals saying that it plans to evaluate cash deployment strategies to ensure better returns to shareholders. Medipal issued the rare statement last month saying it wants to increase return on equity to 9% by the 2027 fiscal year and improve its price-to-book value ratio. Let's get more on all of this with Toshihide Yoda, Senior Managing Director at Medipal. Toshihide, really good to have you here in the Tokyo studio. Before I get into the details of your financials, just tell us a little bit about your company, because you were 3 pharmaceutical wholesalers that merged back in 2000. So what do you specialize on? Because you're sort of a distributor for major companies within Japan.
Thank you for your question. We are, of course, a pharmaceutical wholesaler, but we are trading actually everything in Japan. However, the primary market, like hypertension drug, such a kind of drug will going to the generic. So maybe the Japanese market bipolarized to the generic and specialty pharma. We have to make a strategy for bipolarized, right?
So in your financials, your price-to-book ratio has been below that 1 time for the past 5 years or so. Your target right now is raising that. Do you have a time frame in mind?
Actually, we have the midterm plan year ending March 2027. And our target is by the end of the midterm plan, we are trying to reach to the PBR 1 times.
What prompted this sort of focus on your price-to-book ratio right now?
Firstly, we have to make a new business or profitable business. In addition to that, we have to reduce the net asset. We are selling investment shares. Historically, we have plenty of investment shares, and it's cross-holding. We are selling, and afterward, we make a share buyback and cancel our stock. So both sides, the increase the profit and reduce the asset, then we are trying to reach PBR 1 times.
How confident are you when it comes to the profit goals, or do you think there might be some flexibility in needing to revise those?
We think about reached the 1 times because historically pharmaceutical wholesaler and including maybe similar company, we are thinking about a P&L statement only one. But balance sheet is quite important, and because of both strategy, P&L statement and balance sheet control, we believe reach our target to the PBR 1 times.
What are the plans when it comes to the use of cash in hand right now?
Actually, as I said, use the cash to share buyback, and also the important thing is diversify the profit resources, which means maybe the M&A strategy is quite important. Recently, we bought a food company at a kind of raw material of food. Such a kind of diversify of the business is quite important.
And those are the segments that you're still looking for more M&As?
Yes. Pharmaceutical wholesaling business, maybe margin will be squeezed in the future. Still, is squeezing right now.
Why?
Because of the everybody sell same thing, right? So user shift to the cheaper product, right? So margin will be shrinking. But now 3 companies dominate about Japanese pharmaceutical distribution business. So businesses exist, but margin has been squeezed. So we have to make a diversify. Of course, generic business is quite important. Also, specialty pharma business is quite important. And also the other business, like food business. Such a kind of, the product diversification is quite important to value up the company.
When it comes to food businesses, how exposed are you to geopolitical tensions? Of course, we talk about tariffs all the time. When it comes to pharmaceutical distribution, you are very much focused domestically. But if you are talking about raw materials and other things, does that expose you more to external vulnerabilities?
Actually, the still target is a domestic market. I said that raw material, our food is kind of gummy. Yeah, if you when you eat something to sticky thing, everything have our product, right? Such a kind of raw material food, and it's quite a basic food, but a stable market.
Oh, I see.
Right.
You're also in cosmetics. You're also in animal health as well. Do you see other segments that could grow faster without the squeezing margin that you talk about in pharmaceuticals?
Right. Especially animal health, animal pharmaceutical drug is quite important because of the companion animal or the pet will be increased also in Japan, and also this kind of area has no cap by the public insurance. That is quite important. Pharmaceutical business is quite big, but Japan covered by all public insurance means price has been capped.
I mean, I know very well how much you can spend on your dog, on your pet. So thank you so much, Toshihide Yoda, Senior Managing Director of Medipal, talking to us through the pharmaceutical business, especially when it comes to pets as well here in Japan. We do have breaking news for you at the moment. Japan industrial production gaining 0.5% for the May preliminary numbers, which is a smaller gain than was expected. Still a rebound from the previous month when it actually contracted more than 1%. The year-on-year number still, though, a contraction of 1.8% and also a bigger contraction than what economists has estimated. Of course, we do have really a dynamic variables here in Japan, including the auto tariffs hitting auto manufacturing, not to mention, of course, the chip sector continuing to grow. So we're seeing now the industrial production numbers growing 0.5%. Catch Japan Ahead every Monday at 8:40 a.m. if you're watching in Tokyo. Subscribers can watch live on the terminal using the TV Go function. This is Bloomberg.
And actually the price for the animal.
Minjung, MJ, thanks for doing this. We'll be with you in a bit. Thank you so much for joining us. Maybe next time we should do some. Masayoshi Son has told SoftBank shareholders he plans to lead the company for another 10 years, but he's also revealed the outlines of a succession plan, saying he has several candidates in mind from within the group. For more, let's bring in our technology reporter, Minjung Lee. Minjung, 10 years is still a long time, but we're already talking about successors.
Yeah, it was a bit of a surprise that he spoke of his potential successors, but it was mostly in response to questions from shareholders who seemed a little bit worried about a future without Masa Son. And I think the key goal in saying that he does have a succession plan in place was basically to appease these shareholders who are a bit concerned. But like you mentioned, he did also make it clear that he wants to be around for another 10 years. So I think he will be here for us for the time being.
Clearly a long way down the track, but is there a list of potential successors?
Yeah, he did say he does have multiple people he has in mind within the group, but he didn't mention any names. He did give an example of how the mobile unit, SoftBank Corp, has been now succeeded by Miyakawa, and how he's doing a very good job in the position, which kind of raised questions about whether if he could be a potential successor. But for now, the understanding is that it was merely an example of how SoftBank does have a succession plan in place when it's needed, and it's possible for someone good to succeed Masa Son when the time comes. But at this stage, we don't really know who it can possibly be that could lead SoftBank Group when he does decide to step down. SoftBank did have some potential successors in the past, like Nikesh Arora, Marcelo Clore, but these folks have all left SoftBank for now. So we don't really know anyone who could potentially lead for now. So that's a big question.
Our technology reporter Minjung Lee there. The market opens in Sydney, Seoul and Tokyo are next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens and what could turn out to be a positive day for risk assets across Asia. Haidi, of course, we have more optimism about potential trade deals between the United States and other trading partners, but also with that fragile trade truce with China, potentially we could see the June manufacturing PMI turn positive.
Yeah, not a great deal of detail when it comes to expectations for this trade deal, but President Trump saying that he doesn't see the need to extend that deadline, which of course is creeping up. But Shery, still a great deal of uncertainty. We're sort of less focused when it comes to Middle East politics and back to, I guess, the fundamentals of what happens with trade, tariffs, the broader macroeconomy, but also taking a look ahead at earnings as well.
Yeah, we are just weeks away from the earnings season, of course, to get started in the U.S. as we continue to watch, as you mentioned, Haidi, oil prices as well with Middle East tensions easing. Take a look at the open in Japan because we're seeing that upside for the Nikkei of 1% and extending already 4 sessions of gains for Japanese stocks. We're seeing a little bit more upside for the Japanese yen against the U.S. dollar as well at that 144 level. As we keep an eye on JGBs, of course, we do have a 10 and 30-year auction this week to contend with. We have seen a lot of volatility, so do keep an eye on the JGB space. We are also watching industrial production because we got those numbers for Japan just earlier today, and we saw that disappointing to the downside. We're talking about the month-to-month number barely rising year-on-year, actually contracting. Sort of a similar picture of what we're seeing in South Korea. Take a look at how the Kospi is opening at the moment because we had seen pressure for the Kospi, for the Korean won, and now for industrial production for the month of May, also contraction in this economy. Of course, those tariffs still in place when it comes to the auto sector. Very important for the Korean economy, very important for the Japanese economy. But you can see in today's session, at least, we're seeing gains of 0.6%, while the Korean won is holding steady, Haidi.
take a look at what we're watching when it comes to Australia, because we are looking at like a little bit more upside today after we saw that retreat in the previous session away from those record highs. We saw that drag from banking stocks in particular, but at the moment we're seeing a bit of upside, 0.2% there when it comes to trading for Australian stocks after 2 days of decline. So really playing catch up with the gains that we saw on Wall Street to those record highs. The Aussie dollar also seeing a little bit more further progress at 65.32, looking alongside the Kiwi to clock in some pretty good monthly gains, but that very much depends going forward on the trajectory for dollar weakness, right? But we're also watching treasuries. We did see futures just slumping after Trump threatened more tariffs on Canada. The concerns of high tariffs and the ability to push up US inflation is at play there. But of course, so much of this is built around these growing expectations around Fed rate cuts. Shery.
Let's bring in Hartmut Issel, head of APAC Equities and Credit at UBS Wealth Management. Hartmut, always good to have you with us. It seems that equity markets, at least, are finding any excuse to go higher from this point. We have seen Wall Street again reaching a record high. Will that optimism translate into the Asian session?
Normally, would expect that. Yeah. Although I would also comment maybe that for the near term, maybe till the end of the year, we think, especially if we start at the S&P, right, it's come back since the lows in April quite a lot. So we think probably a bit time to take a pause here and maybe stay more or less a bit flat here for the next couple of months. Although, of course, if I look at 12 months, then it looks like we're going to get more upside. In Asia, then, if we come here, some markets we like a lot. They include Taiwan is probably a bit more upside there. India as well. We have very recently, just a couple of days ago, also included our market here, Singapore. So also like that is attractive. Or if you want to go into China, rather than playing it maybe broad, we think the tech side is particularly interesting. It's almost half of the market. So yeah, there are a couple of interesting opportunities in Asia that we also show to our clients.
Hartmut, I don't know what to say. You sound very skeptic at this point. You sound a little bit hesitant and cautious about the rally that we're seeing right now. Why is that? Is that because we've already rallied so much that there's less room to go higher?
There's a couple of reasons. Let's say, coming back, for example, to S&P, but even to Asia ex-Japan overall, we see that the multiples actually coming a bit on the high side. So the question is there a lot of extra valuation multiple here to be had? That is perhaps a bit questionable. Then in the US, you will inevitably also see a bit softer data from the macro side. Now, you could argue that, of course, consensus has to some extent baked that in, so it will not bring the markets down. But then again, probably a bit of a pause for, checking it a bit out here on a flatter level. So a couple of reasons, and heading up more than 20%, for example, in the US market just in a couple of months. I will not see necessarily a continuation on the same speed right away.
Hartmut, do you think expectations are overdone in terms of the Fed rate cut narrative?
No, actually, I wouldn't say they're overdone. As a matter of fact, if we look at our estimates, we're probably a bit on the high side. So if you look 12 months out, so including the early part of next year, we even think there could be forecast, or let's say 100 basis points. So we're probably even a bit more optimistic here on rate cuts than the market is. So I wouldn't say it's exaggerated or overdone.
Tell us about some of the themes that you still like, that you see further potential for growth.
Yeah, brings me again back to Asia, for example, here. So Taiwan, I mean, that market, a very, very semiconductor heavy market, as we know, and to some extent, of course, AI type of semis in a monopoly position. So that's quite interesting. And also if I look at where the market stands, also relative to recent highs, there is more upside, I would argue. A bit similar for India. India is closing in again on the September all-time highs, but we think this time they will surpass it, because India, that's interesting. They had relatively modest year in terms of earnings growth for the recent fiscal year. But this will change. We think there are 2 years of double-digit growth ahead. So also this is interesting. And Singapore maybe a bit more on the dividend side, but anybody who wants to de-dollarize, go into one of the stable currencies here in Asia, which is the Sing dollar, then also might think about, don't I want to invest it somewhere? Then also here the equity market with these high dividend yields, also quite interesting. So something for everybody.
Is there anything for anybody in Chinese assets at this point? Because we are expecting that manufacturing PMI to go into expansion territory. Will that give a momentum and a leg up for Chinese assets?
Yes, I think on the equity side for Chinese assets, certainly the tech side of things, that is particularly interesting, and you can include a couple of different ideas there, right? So internet, the ones we're all used to, the big stocks, but then also humanoids, right? That topic is coming up as an interesting one, and of course on that side of the regions, then China also gets into the gears, and some of the bigger companies also on the EV side, right? They're starting to build these things up. So it's very early for that. And then if I look at valuation, also this is one of the places in China where you can expect double-digit earnings growth. I would say the tech side in China, that is the one I would focus on right now.
Hartmut, we have seen, of course, a lot of volatility when it comes to energy-related stocks as well. And given, of course, China's reliance on the oil imports as well, are there any energy sectors across Asia that you'll be watching very closely?
Right now, so much on the energy side, what we're watching is more the supply of energy, so electricity, etc. This is where we have, on a global scale, especially also with a focus on the US, we call it power and resources, and that's more AI related, right? So the first time since 30 years where the US actually sees an uplift in growth in, call it energy, but it's more actually electricity. So that's probably the area where we think investors can take a look.
Hartmut Issel, good to have you with us, Head of APAC Equities and Credit at UBS Wealth Management. And some of the stocks that we'll be watching in today's trading session here in Tokyo especially is SoftBank, given, of course, the hints that Masayoshi Son has given when it comes to succession plans. He still plans to stay for another 10 years, but has said that he has several internal candidates in mind to succeed him as CEO. Of course, Son reiterating his vision for SoftBank's future, including becoming the world's top platform for artificial superintelligence and also investing heavily in AI-related technologies. This is Bloomberg.
I don't think I'll need to because I could. No big deal. It's like TikTok. I'm extending that, but no big deal.
President Trump saying that he doesn't think he'll need to extend the July 9 deadline for trade deals. Of course, we are expecting those tariffs to go higher from the current 10% pause. As we're expecting that deadline, we're also watching Japanese car makers in particular. A little bit of a mixed picture, but President Trump, again, having comments against the trading cars between the U.S. and Japan, saying that it's unfair, citing that the U.S. takes millions of Japanese cars while Japan won't take American cars. In fact, saying that he'll be writing letters to Japan going, "Dear Mr. Japan, here's the story. You're going to pay a 25% tariff on your cars." That's quoting the president there on his latest comments criticizing Japanese trade in car makers and this whole sector. So you can see not a lot of ripple effects in the markets, but a little bit of a mixed picture and something that we'll keep an eye on with our Chief North Asia correspondent, Stephen Engel, because it's not just a Japan-U.S. trade deal that we're awaiting, Steve. Of course, it's all of these trade deals with more than a dozen trading partners from Washington. Where are we at?
Yeah, well, the clock is ticking, definitely. It's just 10 days now until the end of that 90-day trade truce with most of the United States' trading partners. Of course, there's just been 2 deals reached so far. The UK was first, and then more recently last week, a framework deal that was reaffirmed by China and the United States. So just 2 deals. It falls short, well short of what Peter Navarro back in April said, that the U.S. would like to have 90 trade deals in 90 days. So we have 2 so far, but insiders, advisors to the White House are essentially saying they expect agreements to come forward in the next 10 days with as many as a dozen other trading partners by that July 9th trade deadline. The deals will probably not be will probably not fully resolve the trade issues, and we'll have to see if we get all the details. Who are the countries that are possibly, first in line? Well, there's been some positive vibes on the India front, as well as you mentioned, Japan. Maybe not as much Japan, but South Korea, Taiwan, Vietnam. The EU even has some positive vibes right now. So it'll be a very interesting next 10 days now that perhaps the temperature is down a little bit in the Middle East. The White House can focus on these trade deals over the next 10 days.
This global sort of trade war was based on the premise of reshaping global trade and reshaping the norms of global trade. Does it feel like perhaps the actual achievements might fall short of those reforms?
Well, it will definitely fall short on the specifics and the details. So likely what we are going to see in any trade deal over the next 10 days, it will be a framework agreement of some sort, similar to what we got with China, basically reaffirming a framework. And then the nitty-gritty of specifics will be potentially revealed throughout the course of dialogue and negotiations. We'll have to see, really, because, again, we have Scott Bessent, among others, talking about, even Donald Trump said, let me quote what he says. He says, we would like to send letters that basically say we can do whatever we want. I'd like to just send letters out to everyone. Congratulations. You're paying 25%. Now, of course, they cannot necessarily reach deals with all of them on a unilateral basis and negotiations over the next 10 days. So there's going to be discrepancies, obviously. Some will likely see adjustments to that 10% baseline. Others, maybe on July 9th, or Donald Trump mentioned, maybe even sooner than July 9th, go back to what those reciprocal tariffs were set at in April. So there's a lot of uncertainty. And Scott Bessent essentially says some of those smaller nations might, I'm paraphrasing here, might not be at the front of the queue as far as negotiations. But again, they could go back to that baseline or stay at that baseline 10% if they are perceived to be negotiating in good faith. Well, it's tough to negotiate in good faith if you're not getting face time, right? So a lot of uncertainty over the next 10 days for sure.
Stephen Engel, our chief North Asia correspondent there with the latest on all of those trade deals. And despite the uncertainty, Steve was telling us earlier about those positive vibes when it comes to Europe and the U.S. Well, those comments coming from the European Commission President Ursula von der Leyen really filtering through the markets across Europe. She expressed confidence in reaching a deal with the U.S. before the deadline. That supported sentiment. You can see right there, even futures are higher at the moment. And this, of course, after we already saw the best week in about 6 or so for European stocks in the past month. So we continue to see a little bit of upside with the euro holding at that 117 level, Heidi.
Take a look at what we're watching when it comes to commodities and, of course, the overall picture when it comes to oil and energy markets looking a little bit more stable at this point with the diminishing of those Middle East geopolitical risks. But we're now focusing back on to the OPEC Plus picture, that meeting set to weigh another supersized oil output boost and how that's going to play into the broader picture as we see sort of that supply and demand picture returning back to fundamentals. Quite a bit of downside there when it comes to Brent crude. Iron ore at the moment, also looking a little bit softer ahead of what we're seeing when it comes to China PMI numbers as well. This, as we have still just sort of ongoing concerns over steel mill demand. But iron ore is sort of on track for the first weekly gain, though, from last week in about 6 weeks, a sign of stability from those Chinese mills at play there. In the meantime, though, Australia has cut its forecast for commodity export earnings. Prices dip, demand softens amid rising trade tensions. Bloomberg's Paul Allen joins us now for more. And a lot of this obviously comes down to China demand.
Yeah, very much so. Every 3 months, every quarter, the Department of Science, Industry and Resources puts out a report, and every quarter the reading just seems to get worse and worse. Total export for resources and energy down 7% in the past 12 months to June. In dollar terms, that's about $18 billion. And in terms of iron ore, I mean, obviously Australia's largest export, largest customer is China. China not only has these well-understood problems with the property downturn, but also the trade and tariff environment not helping the demand picture either. So the department's saying that a lot of consumers, a lot of businesses are just taking this wait-and-see approach. It doesn't get any better over the coming 2 years, and if we take a look at the picture for LNG, the second biggest export, well, that's facing headwinds as well, not just from global demand, but also a lot of extra supply coming on from the US and Qatar as well. So the department forecasting another $21 billion decline over the next 2 years.
And gold under a little bit of pressure today, but that's been on a steady rise. Has that helped soften the impact for Australia's commodities exports?
Yeah, maybe a bright spot there, although it's not going to fill the void created by those depressed iron ore and gas prices. But yeah, gold around 3,200 at the moment, as you say, off record highs, but still near them. And then when you put that in Aussie dollars, it's about $5,000 an ounce. So if these prices are maintained, the department sees gold becoming Australia's third largest export earner, overtaking metallurgical coal. And there's a few other bright spots as well. The longer-term picture for copper, lithium, still pretty positive as the world transitions towards cleaner energy sources as well. So it's not all doom and gloom, but these gains are not going to make up for the declines in iron ore and gas. And in terms of the government putting a budget together, the job's just getting a little bit more challenging.
Thanks, Paul Allen there. Take a look at what we're watching when it comes to trading here in Australia. We did see a couple of down sessions, particularly in the light of some of these concerns over Chinese growth and the uncertainties over trade. But at the moment, we're seeing Aussie stocks bouncing back, tracking that record high that we saw on Wall Street. This is a market, of course, that's just recently retreated from its own record highs there as well. We're starting to see a little bit more support there. The Aussie dollar also being supported above that 65 US cent level quite comfortably. We are seeing, though, when it comes to Australian bonds, a little bit of that move as we see Treasuries really falling as the threat of more tariffs on Canada. Some of the uncertainty over broader trade deals continue to weigh there. More ahead on the Asia trade. This is Bloomberg.
Take a look at how U.S. futures are looking early in the Asia session after already on Wall Street we saw that record high. We're talking about a $10 trillion rally has defied Wall Street expectations so far, and you can see futures still pointing to the upside. We continue to follow the tax negotiations in Congress. They're trying to pass President Trump's $4.5 trillion tax cut bill. Polls showing that only 49% of Americans, opposed the bill, and only 29% supported. Of course, the tax bill would include more than $1 trillion worth of spending cuts in order to pay for it. That would reduce spending on Medicaid, health insurance for the poor and disabled, food assistance, and other low-income Americans' financial aid. But U.S. Energy Secretary Chris Wright also saying that the administration's goal is to secure a peace deal with Iran following the strikes on the country's nuclear sites. Speaking to Bloomberg, he added that Washington aims to promote commerce, not conflict, in the Middle East.
The sanctions are still in place. No change there. I think what President Trump was referring to there is, hey, if we make a large peace and sanctions come off, Iran can flourish.
Have you got a decent understanding, though, Mr. Secretary, of just how much Iranian crude is being consumed and imported already as things stand, despite the sanctions?
We do. So Iran produces about 3.5 million barrels a day, and they've been exporting about 1.5 million barrels of oil a day. And the maximum pressure campaign that President Trump did in his last term tamped that down to only 100 or 200,000 barrels a day. They cut off 90% of it. That was a possible strategy here as well, but hadn't been implemented yet. We tried to give negotiations a chance, see if we can do it without maximum pressure.
So is maximum pressure still on the table, or is the administration walking away from that?
Well, the goal right now, of course, is to get a peace deal, is to get peace into the Middle East and spread the focus on commerce, not conflict. So, no, it's not actively being discussed right now, but the situation's still dynamic there. We want to see peace, prosperity, and security as the future of the Middle East.
When it comes to what's going on in Iran as well, in terms of the IAEA, the foreign minister said yesterday that basically they have no plans to having the Director General, Rafael Grossi, in Iran. And it doesn't sound like they're willing to give the inspectors the space, time, and access they need to look at these nuclear facilities. What is the United States' response to that?
Yeah, look, this is early on. This is early on. Iran has just had most of its nuclear program entirely devastated by Israel and the United States. They're a little bit humbled. They're a little bit shell-shocked right now. So, yeah, I wouldn't put too much weight on those words, but a final peace deal certainly has to have confidence in a dismantlement of the Iranian nuclear program and that people can have security. It won't be resurrected in the future.
You deal with a lot of nuclear at the Energy Department. Before the U.S. strikes, but after the Israeli strikes, Rafael Grossi told us that the IAEA cannot verify whether 400 kilograms of 60% enriched uranium in Isfahan was currently where it was. Was it still there? Did the Iranians take it out? Doesn't the IAEA need to go in and verify where this enriched uranium is?
I think that's quite likely part of a future negotiation or a future deal.
U.S. Energy Secretary Chris Wright speaking to Bloomberg's Jonathan Ferrer and Anne-Marie Horton. Take a look at how treasuries are faring at the moment as we saw that softer trading in the futures session. This is the picture as we see quite a divergence when it comes to the longer end versus the shorter end of that curve. Of course, this is the expectations of Fed rate cuts continue to build. We had that third week of gains for U.S. Treasuries on the back of these expectations. Traders now fully pricing in 2 rate cuts this year, the first coming in September, focusing on fresh data this week. We get, including in that tranche, the June employment report as well. This is Bloomberg.
You're watching the Asia Trade. Here's a quick look at the week ahead. Global central bank chiefs will discuss monetary policy at the ECB annual retreat in Portugal. The discussion is expected to focus on navigating risks to inflation and growth amid tariff-related trade eruptions, not to mention, of course, oil price gyrations. On the data front, the U.S. jobs report dropping on Thursday ahead of the July 4th holiday. Economists predict 113,000 jobs were added in June, which would be the fewest in 4 months. And here in Asia, key economic reports include PMI data out of China and the Bank of Japan's Tankan survey tomorrow. But let's focus on those Chinese numbers because Beijing will release its June PMI numbers later this morning, and they're likely to show the economy continuing to struggle. Let's bring in our China correspondent, Min Lo, in Beijing. Min, of course, we saw that trade truce, temporary as it might be, between the U.S. and China. Are we going to see any positive sentiment coming through that, or what are we expecting in the data?
Yeah, the consensus actually is not too positive. We are expecting the manufacturing PMI to contract for a third straight month, coming in at 49.6, just a slight improvement from the previous month. But the consensus, the economists' forecast actually was pretty divergent, and our own Bloomberg Economics team believes that the manufacturing PMI could perform pretty well, expanding to 50.4 this month on the back of that U.S.-China trade truce, as you said, where we have seen export shipments actually rebounded pretty well in the month of June. And then you have the non-manufacturing PMI expected to remain flat at 50.3. And so far, we haven't seen a lot of new drivers for the non-manufacturing front because there was the May Day holiday in May, and then there was the 618 shopping festival, which saw a surge in retail sales in May, but that momentum had largely faded off in June. Plus, you add to that the weak home sales, possibly going to drag on the data as well. The construction sub-index expected to remain steady. So overall, not a very positive picture, although Bloomberg Economics thinking that it is going to be quite optimistic on the manufacturing front.
And yet, does the PBOC seem a little bit more optimistic when it comes to economic momentum? What were the takeaways from the quarterly monetary policy meeting?
Yeah, the PBOC, as expected, gave its assessment of the economy and saying that the economy is actually recovering quite well. Consumption sentiment has been returning as well, but there are still some challenges, including the deflationary pressures on the economy, the weak domestic demand. And so when it comes to the monetary policy, the PBOC said it will continue to hold this moderately loose policy and to aim to bring about stable growth and to keep prices within a reasonable range. The PBOC also saying that it will keep its policy flexible, taking into account the domestic, internal and external conditions. So overall, pretty supportive stance from the PBOC monetary policy-wise. But I think what's missing is the fiscal policy, because we have heard, for example, Premier Li Qiang last week at the World Economic Forum in Tianjin saying that he wants to turn China into this consumption powerhouse. But so far, still, the government has been not giving a lot of details in terms of how they'll go about doing that.
Bloomberg's China correspondent Min Min Lo there. Take a look at how we're faring when it comes to the first half an hour or so of trade across major Asian markets this week. This is the Monday session. We saw, of course, Wall Street reaching another record high, the first since February. We're seeing quite a bit of broad upside across the region, that leadership being shown by Japanese stocks up by just about 1.5%. Sydney stocks reversing 2 sessions of losses to trade to the upside too. But institutional investors we've spoken to appear pretty cautious about the stock market in the second half, citing risks such as tariff deadlines, mixed earnings outlooks, US-China tensions. Let's get more from Garfield Reynolds, who leads our Markets Live Asia coverage. Is a lot of this still being driven by, this sort of taco trade idea that it's not going to be as bad because Trump has pulled back from the more extreme rhetoric?
Yeah, I think that's playing a major role. In fact, you effectively ended up having, a taco-esque resolution to the Middle East tensions. Those kind of blew up out of nowhere, got stock investors nervous about what it might mean, if we did get disruptions to oil supplies from the Persian Gulf. That was going to be a big difficulty for risk assets. But ultimately, you didn't get any such disruption, and you did get the tensions go away, same as they did apparently with the reciprocal tariffs. I mean, you can argue that, and I often have argued that investors are being complacent about the long-term impacts of tariffs. We do have the highest US tariffs in decades. That will have an impact, but isn't an impact that is going to significantly hurt companies and the economy. The data on that has yet to sort of come out one way or the other. So from equity investors' viewpoint in particular, the anticipation still seems to be that stocks can ride out these challenges, same as they have ridden out the challenge of the Middle East tensions blowing up, the challenge of the incredible shock of the reciprocal tariffs. If you remember the days after that happened, how everybody was scratching their heads and saying this will be a disaster, and ultimately Trump did cave on those and moved to signal that he wants to make a lot of changes to the way the world works, but he doesn't necessarily want to see the stock market, and in particular the bond market, crash as a result.
He seems less willing to make concessions when it comes to the tax bill, right? Does that mean it keeps the longer end of Treasuries looking a little bit pretty nervy?
Yes, that's definitely part of the mix. And I mean, the Treasury market in general is perhaps more exposed to Trump-inspired volatility at the moment because you've got not only the tax and spending bill, you also have the lingering concern about what happens with the Fed, his talk about how he may soon announce who is going to be the next Fed chairman, and that's expected to be somebody who would look a lot more dovish than Jeremy Powell. That's an issue, especially in a week when, remember, we've got that ECB meeting in Portugal where there are a lot of central bankers speaking, including Powell. So that's going to keep bond investors on their toes, as well as the question of what happens. Might even be more important than what happens with the tax bill, because there's also the potential there that if there is an increase in issuance, that will be focused in bills rather than in bonds. So at least in the short term, the impact on the bond market might not be too huge.
Sort of similar implications that we're seeing here in Japan as well. What we heard the finance ministry trimming that bond issuance and adjusting their issuance. We do get auctions for the 10 and 30 years. So what are you watching when it comes to the JGB space, given the ructions that we've seen already in global bonds?
Yeah, it would be very interesting to see how the 10 and 30-year auctions go off this week. We had that 20-year sale last week, which went off okay. Yeah, certainly better than had been feared, much better than the prior months. The bar might be a little bit higher for the 10s and the 30s because those are more, so to speak, mainstream tenors. They've traditionally been better subscribed than the 20. If there are signs of weakening demand, then that would have a major impact, and that would bleed across to US Treasuries. There's nothing at the moment that's really screaming that would be a problem. Yes, we have some curve steepening going on globally and some concerns about the long end. Then again, we also have the declines in the oil price. For Japan in particular, that's important. That takes pressure off on the inflationary side, and we've got the potential for further OPEC plus increases in production that could be announced this coming weekend. That's also going to reassure bond investors that inflationary drivers from oil are going to be less, and that safeguards to some extent the fixed income returns that they're looking for. And Japanese yields are higher than they have been for, on average for many years. So you might see decent demand, and if we did, then that would definitely be taken as a major positive for a market that's been extremely volatile and that remains on a knife edge as the BOJ moves to reduce eventually its purchases in the bond market and to raise at some stage again its benchmark interest rate.
Garfield Reynolds, always good to get your insights, who leads our Markets Live Asia coverage. And of course, we will also have live coverage of a very important monetary policy panel on Tuesday from the ECB forum in Portugal. We're talking about key policymakers that could have implications for the markets. That conversation moderated by Bloomberg TV's Francine Lacroix at 9:30 p.m. in Hong Kong time. Still ahead on the Asia trade, the Thai Prime Minister's poll numbers tumble into single digits as protesters rally, demanding that she step down. The latest from Bangkok next. This is Bloomberg. The dollar reversing some of those gains that we saw last week. Of course, it's been down more than 10% year to date, but we are seeing on that other side of the trade some strength for Asian currencies, also emerging currencies. You can see the Thai baht, though, holding steady at that 32.62 level. And of course, we continue to follow the latest on the Fed trajectory and the U.S. economic signals of resilience, with consumer sentiment rising sharply to a 4-month high, and how that will really trickle through when it comes to other central bank monetary trajectories across Asia. But let's turn to Thailand, because support for the Thai Prime Minister Paetongtarn Shinawatra has slumped to single digits in the new opinion poll as her leadership faces really challenges by a diplomatic scandal. Bangkok Bureau reporter Papicha Tanaka Sempipa joins us now for more on this. So give us a little bit of background what the scandal is and how significant the protests have been when it comes to the challenges to her leadership.
Sure. More than 20,000 people, according to police estimates, gathered in Bangkok on Saturday to call for the resignation of Prime Minister Paetongtarn Shinawatra, saying that she had betrayed the country in a phone call with former Cambodian leader Hun Sen, which was leaked earlier this month. The protesters said that she needed to resign because she had disgraced the country when she was being deferential with Hun Sen on the phone. And the protest had the biggest turnout in years and quite significantly raised the political temperature on the ground in Bangkok, with the government still very much teetering on a brink of collapse and not doing much to address this public anger. And a lot of the frustration also had to do with the government's handling of a broader land dispute with Cambodia, which is why the Thai national flag was being waved around everywhere at the protest site. There is also potential for this to escalate when the protest leaders are planning to meet later this week to decide whether to have a second rally, and that could further raise the political temperature on the ground in Bangkok.
Are people now concerned about the risk of a military coup?
I have to say that the Saturday protest was very much an all too familiar scene for many observers of Thai politics, because it shows the coming together of various groups that had opposed to Shinawatra governments in the past. Many of the same protesters had rallied against Paetongtarn's father Thaksin and aunt Yingluck, with those protests actually leading to military coups in 2006 as well as 2014. And that is why this can feel a little bit like a political deja vu. And the main opposition, People's Party, actually urged the protesters to withdraw from the movement and warned that if it keeps going, then it could set a very dangerous pretext for a second coup, for another coup. And so far, the army chief has said that the army is still committed to democratic principles, which suggests that it will not yet intervene at this time, but that has done little to really ease the fears of the people on the matter.
What does it mean for the Thai economy and, of course, Thai assets?
Paetongtarn is suffering from a decline in popularity, as you mentioned earlier, and that can have huge ramifications on the survival of the government. So far, investors have pulled more than $2 billion worth of Thai stocks based on prolonged political uncertainty. And let's also not forget that the escalation of protests will be a key watch point, and also a barrage of legal petitions that have been launched against Paetongtarn will also be worth watching for. The phone call with Hun Sen has led a group of senators to accuse her of ethical violations, which could be grounds for disqualification. And the Constitutional Court is set to meet later this week and could consider one of those petitions. And its decision could then have huge implications on the survival of the government.
Bangkok Bureau reporter Papicha Tanaka Sempipat there. Some of the stories that we're following today, and Senate Majority Leader John Thune is working to pass President Donald Trump's tax and spending bill by July 4th. He's facing opposition from around 8 Republican senators and must find a compromise between factions of his party. Some of them are pushing for deeper spending cuts, others are seeking more funding for health benefits and renewed energy subsidies. President Trump says he's found a buyer for the U.S. operations of social media platform TikTok, but won't provide details for 2 weeks. Trump told Fox News that it was a group of very wealthy people, but the deal will need China's approval, and he expects President Xi Jinping to agree to it. Trump has said he will extend the deadline for ByteDance to sell its U.S. TikTok operations for a third time. Australian Foreign Minister Penny Wong will meet her Quad counterparts during her trip to Washington this week. Wong will meet US Secretary of State Marco Rubio along with representatives from India and Japan. According to an emailed statement, this will be the second such meeting of foreign ministers from the 4 nations in 6 months. More ahead here on the Asia Trade. This is Bloomberg.
This is the Asia Trade, the latest from the corporate front. Ford CEO Jim Farley says the automaker had to idle its factories in the U.S. over the past 3 weeks due to a shortage of high-powered magnets. Farley says this shows the need for a domestic supply chain as U.S.-China tensions restrict supply of rare earth elements. The magnets are critical to seats, windshield wipers, doors, and audio systems.
We shut down plants for the last 3 weeks because we cannot get high power magnets go into your speakers in the audio system, your seats motors, your wiper motors, your door motors, and we can't make that stuff.
Former Hong Kong Stock Exchange chief Charles Lee plans to list his new fund, MicroConnect, on the bourse this year. If successful, it would mark the city's first investment fund IPO in nearly 15 years. The fund aims to support small businesses across China, Southeast Asia, Latin America, and the U.S. Meanwhile, HKX saw a wave of weekend IPO filings from biotech firms Bliss Bio and Hangzhou Daigens to hotel giant Jinjiang.
Chinese startup Noetix Robotics has seen orders triple after its N2 humanoid robot took second place at the Beijing Marathon's robotics showcase. In April, the founder, Jiang Zheyuan, spoke exclusively to Bloomberg about the company's growth, how it plans to navigate tensions between the US and China.
The biggest change to our company is that we sold over 2,500 robots to our consumers after the race. The second biggest change is that a lot of media and investors are coming to our company to interview me or my team and to invest.
How much are you looking to raise right now?
We're looking to raise over 250 million Chinese yuan in the newest round of fundraising.
What valuation are you doing that at?
The newest round of raising of our company, we are valued at $200 million US.
Before the humanoid robot race took place, what was your valuation?
Before the marathon race, our company was valued at, in Chinese yuan, is 500 million Chinese yuan. It's like 70 million US dollars.
And so 2,500 robots essentially since the robot race. What does that mean for your annual production capacity, and is that changing?
This year we are building about 2,000 robots, and next year we plan to build over 10,000 robots. And we will be, we want to be the first company in the world to produce more than 10,000 robots.
So today Noetix robots are sold in China. When would you look to expand abroad, and where would you go to in particular?
We'll start our global sales in like October or after. We target to sell our robots to North America and Europe and Middle East.
The products that you use, or the components in the humanoids, are they sourced from China, or do you also need to source products or components from other parts of the world?
Most of the parts of our robots are manufactured in China, but there are a few parts of the robots that are from global suppliers. Like we are using the STM32 chip in our joint motors and our communication boards. We are using Intel chips in the computer of our robots. And we are using Intel RealSense camera in our robots to see the surrounding environments. Besides these, most of our components are manufactured in China.
But on those products that you are using, and particularly from the US, do you have any contingency plans in place if the US were to further restrict China's access to technology?
Yes, like the STM32 chip, they can be replaced by GD32 that is manufactured in China. And we are now testing the Rockchip CPU to replace the Intel CPU in our product.
Do you see a scenario then where you're not using any technology from the US?
So I think we should embrace technologies from all parts of the world. We are thinking about the extreme situations, and we are having plan Bs for that situation.
Noetix Robotics founder Jiang Zheyuan, they're speaking exclusively with Bloomberg's Annabelle Drewlers. Let's get you a quick look at our US futures as well. Stocks are setting up across Greater China, trading there as we have, of course, China PMI numbers due. There is some expectation that perhaps this tentative trade truce with Washington might feed through to some economic stability. We also had that PBOC quarterly meeting on Friday, which suggested there was a bit more patience in terms of not wanting to rush into injecting more RRR cuts or interest rate cuts, but looking like an upside day when it comes to broader markets, Shery.
Yeah, most sectors in the green right now. Healthcare, industrials leading the gains across Asian assets. And we're talking about Japan also gaining 1.6%. 5 sessions of gains already and at the highest levels since July of last year. That's it from the Asia trade. Our markets coverage continues. The China show is next. This is Bloomberg.